What's up, guys? Welcome back to a new video. And in today's video, I want to tell you a bit more about my mechanical trading strategy, the power of such strategies, and how you can use it yourself. And I'm also going to give you some tips that can improve your trading. So let's get started. All right, so we are at the dollar index chart. And as you can see, I've highlighted a very important level here. And this level is a key level because as soon as price broke, it immediately fell down. And that's a very good sign. So this is a key swing high. This created this entire down move. Then we've got some touches near that high that didn't break the high and that also didn't break each other. So you can expect liquidity to build up in this area and above that swing high. Now, like I said earlier, if there is an area of liquidity, I really want to see how price reacts to that liquidity. In this case, price went into it and then quickly fell down back below the level. Now, that's a very, very bearish sign. Look at that strong reaction there. We haven't seen it anywhere previously. And this really tells me that someone with a lot of capital wanted to be short the dollar index. So that gives me a bit of a short bias there. Then in terms of my mechanical part, basically, I'm not going to give you the rules, of course, but basically I quantified this pattern over here. I made black and white rules that are programmable. So there's no thinking, no guesswork. It's just black and white. And according to my rules, according to these, it's about these three candles. According to my mechanical setup, if I get you the statistics in, there we go. So these are the statistics, very, very basic testing I've done here, but it shows me that there's a 68% chance of price tagging this purple line before taking out the high that created this impulse move. Now that's a very useful statistics, and the statistic went valid as soon as this close happened. So it's a 3-bar pattern I made rules about. There again, I'm not going to show you the rules because then I would be giving my edge away for free. But at this certain point, so as soon as this closes, I know there's a 68% chance of price tagging that lower line before taking out the high. And that puts the odds in your favor. This is based on years of data. I went back to 2013. So that's around 7 years of data. So to me, that's statistically valid. So yeah. Odds are in my favor at this point in time if I short the dollar. Now, if you go to the hourly time frame, is also very nice because, as you all know, I trade Wyckoff, and this is just a clear redistribution pattern. Got some equal highs there, equal lows here. Price runs into the highs, and remember, we have a short bias because of this quick reaction on the daily time frame. At that important swing point. So we do have a short bias that we get this range. We do expect it to be redistribution because of the location. Price breaks the highs at this area and then quickly falls down. And now notice the price stays below it. And that's a big difference between accumulation and redistribution. Look at breakout to the upside. Price broke up and immediately fell down. But as soon as the liquidity on the other side got triggered, price kept falling down and stayed below the range. And that's how you notice the difference between accumulation and redistribution. But with that aside, so we have my mechanical setup that puts the odds in my favor. 68% chance of hitting that level. We got the location that's great just after that false break on the daily time frame, and we've got a redistribution range. So from testing, journaling, I know that the 68% chance is definitely higher. It is anywhere between 75 to 78% because the odds, of course, change as you trade the edge. So very high odds of shorting the dollar. And what was weird to me is that a lot of people were looking for longs in the dollar. And if they did their homework, if they tested their strategy, they would probably find out that it was not a smart move to go short there. Or to go long there, excuse me. I knew that the odds were massively in my favor if I went short. So I was like, why on earth, why are you going long? But people just don't take the time to actually test the stuff and get the statistics and actually get to know the markets, how it behaves in certain areas, how it behaves when certain things happen. I know these things about the dollar. I know these things about all the pairs I trade. But for some people, for some reason, people don't want to know these things. And they are only after the money, which will never come if you don't do your homework. But with that little rant aside, I knew that the odds were in my favor, shorting the dollar. And then I looked at setups. And of course, the euro dollar is basically the inverted version of the dollar index. Same thing happens here. Key daily low, another touch there. Price fell down below it and then quickly moved up, giving me a bullish bias. And then I got two mechanical setups happening over here. Again, it's a 3-bar pattern, not going to give you the rules, but these were in line with the statistics of the dollar. And as you can see, it's a reaccumulation range again, 2 touches, false break over here, and a real breakout. Same thing here. It's a bit less clear, but we got this swing low, false break, and then a clean breakout again. So that's the essence of my mechanical trading strategy. That's exactly what I've quantified: an accumulation pattern, a reaccumulation pattern. I've basically quantified these patterns. So there's no guesswork. I can program it, but I'm not programming it because lately I've been adding some discretion to increase my performance. But that's it. I know shorting the dollar or buying the euro dollar puts the odds massively in my favor. I had 2 mechanical setups in the euro dollar here, lined up with these dollar statistics, and I took 2 longs. Number 1 was in this area over here, and long number 2 was in this area over here. And look, prices traveling up. I took profits on both of my positions already, despite of the fact that the bias is still in play. And I did that because my targets on these 2 mechanical setups were hit. However, the bias is still in play, and that's something I'm testing right now. What if my dollar bias is still in play, but my targets are hit on my mechanical trades in a certain pair? Can I hold my trade for longer? That's definitely something I'm testing out right now. But I took 2 trades, a lot of confluence. Odds were massively in my favor, and that's really the power of mechanical trading. Let's say you wake up and you know that there is a 68% chance of, for example, tagging this line, but maybe something else. But let's say you know that there's a 68% chance of price tagging this lower line before taking out that high. You wouldn't be looking for longs, you would be looking for shorts. And it gives you a lot of clarity. You know what you're looking for. You don't have to look for both sides of the markets, multiple setups. You know when the odds are in your favor. And then you simply find your entry setup depending on what it is. And then you trade these statistics. And that's trading. That's the power of mechanical trading. Trading isn't that hard. You really need to do 2 things. First of all, you need to learn and identify when the odds are in your favor. And that's where most people go wrong. They don't even know when their odds in their favor. They have never tested anything. They just learn a strategy from someone and expect it to work off the bat, which is never going to happen. But you need to know when the odds are in your favor. And number 2, you need to only trade when the odds are in your favor. If you can do these 2 things, you will be profitable. It's that simple, but people don't know when the odds are in their favor. And if they do, they usually find a way to fuck it up by trading in the meantime or by not sticking to the rules. And if I tell it like this, it sounds so easy to do, but I don't know, people just have a bad habit of keep fucking things up or not doing the research. But if you are still a struggling trader, think about where your problems are. Is it because you can't identify when the odds are in your favor, or Is it because you know when the odds are in your favor, but you keep making mistakes because of psychological issues or boredom or whatever the case may be? That's really something to think about for yourself, because knowing where your problems are can then help you to put you in the right direction to actually fix your problems. So yeah, quick little tip there. I hope you learned a lot from this video. This is the power of mechanical trading. This is what I teach my clients to do. And this gives a lot of clarity. I've had some great feedback from people that were like, man, I was always so stressed when I was trading because I had to look at this and then I had to look at that and think about the news and all these type of things. But now they have clear structure. They have rules that they establish themselves. They know when the odds are in the favor. They know when they should be in the markets. They know when they should be looking at the charts. And there is no stress there. They know exactly what to do. And knowing that and having the confidence really makes trading a lot easier and a lot more enjoyable. So thank you guys for watching. Please leave a comment down below if you have any questions. And I speak to you guys in the next video.